Ramanathan spoke with the chief investment officer of risk advisory firm Validus, whose clients have nearly $2 trillion in assets, about what to expect.
I think the Fed is in a tough position. It happens that all these events happen during their purdah period, which is the self-imposed, non-communication with the market, which makes things even more complicated. However, the good thing is that there's a bit of a roadmap set up here. The ECB had their meeting last week, European Central Bank. They did deliver the 50 beeps that was expected. And Ms. Lagarde went to great lengths in showing that or making the point and communicate the fact that short-term interest rate and tools used for addressing systemic risk can be separate. We also have precedents of that, during the European debt crisis back in 2010 to 2012. In fact, in 2011, you might recall there was a rate hike by the ECB in the midst of all that turmoil, and Mr. Trichet, who was the head of central bank then, made a tremendous amount of communication to make sure that there's a separation in that. I think that's a wise thing to do, and I think probably that's what the Fed is going to adopt as an approach, because frankly, to be fair, a little bit of their own doing. They've been late at the party on the inflation side, and they find themselves in a difficult spot. But for them not to raise, it'll itself send other signals, make people wonder why, and so on and so forth. So I think they have a good setting, given last week's ECB, to make this dichotomy. And, most probably markets still pricing a 25 beeps hike, mostly. So that's what's likely to happen.
Do you think that decision will influence the Bank of Canada at all?
That's a tougher question. I think we have in Canada, a very different situation. Our initial conditions when it comes to leverage in the system, and the nature of our housing market when it comes to mortgages are very distinct. And I think that was what drove the decision of the Bank of Canada to pause. I don't think that fundamental difference between the two economies has changed. However, central banks are always data dependent. So we'll see what that brings. But given the general situation and given that we're already on pause, it simplifies a little bit the job of Bank of Canada. They're not under too much pressure.
Are we missing anything in terms of external factors, potential contagion fears, that the market hasn't priced in yet?
So generally speaking, we live in a very interconnected world now. And, I think it was Donald Rumsfeld who coined the term known unknowns and unknown unknowns. So the unknown unknowns, we're not aware of. The known unknowns is that, there is weak points in the system, and we haven't tried them all. If you think of 2008, for example, really the first event was in summer of 2007. And then it took a whole, 6 months for things to kind of unravel. So now we have tested a few weak points. The question is where those are. And the other element of it, with like any other crisis, is the psychological element. And that's where really I think the regulators and the politicians' job is to provide a level of confidence that so far has been less than optimal. So there are still weak points, I think, but whether they're going to be tested or not is going to depend a lot on the tone and the approach that they're going to take in the coming weeks and months.